You're already investing. You just don't know it yet. So by the end of this video, you will realize that even by holding cash in your bank account, you are technically investing. In economics, there's something called Exter's pyramid. Basically, it's a diagram that shows the risk in financial assets. So reading from Wikipedia just really quickly, it says it's a way to visualize the organization of asset classes in terms of risk and size. So the higher up the level is of this financial asset, the riskier it is. So at the top, we've got derivatives and unfunded government liabilities. Unfunded government liabilities, unfortunately, means pensions. These are pensions that the government does not have the revenue for in the future. Unfortunately, governments have spent like drunken sailors. They have spent everyone's pensions, and at the moment they're just funding it by borrowing and also by using our tax receipts to pay existing pensioners. So those of you who are my age, 25, probably, to be honest, even people who are younger than, I'd say 35, to be honest, it's unlikely we're getting our pensions. The money just isn't there. I have a feeling that government will end up defaulting by the time we hit retirement age of 65. Who knows, they might even extend retirement age. I know that a few countries are currently doing that at the moment. They're pushing up the retirement age. China's the latest corporates of doing that. So yeah, it's unlikely we'll get our pensions, I don't think. So the next level below, non-monetary commodities, private business and real estate. Those of you who are big on houses are probably not aware that you are in a fairly risky asset class. Of course, with interest rates going up, mortgages have climbed as well. I think most mortgages now are about 6%. But those of you who are fortunate enough to buy a house, I think around 2020, are probably sitting on pretty low interest rates if you manage to lock it in for about 5 or maybe 10 years. For those of you on the 5-year fixed mortgage rate are probably coming up to refinancing your mortgage, so you might be hit slightly by the increased rates. The next level below are the corporate and muni bonds. These are basically local government bonds. Securitized debt. So securitized debt is fairly complicated. I don't want to spend too much time on this, but it's what pretty much caused the '08 crisis, the collateralized debt obligations, CDOs. You can look it up in your own spare time. It's quite complex. I don't even want to spend too much time on it. It's just, anyway. And listed stocks. So the stock market, that's the S&P, Nasdaq. These are the next level up, the next level down. Sorry. There's a certain element of risk to it. Of course, the S&P, they say it averages around 7% a year. That's what they say. But the past year, I think it was more than 20%. So it had a good year, had a really good year. The next level below are government bonds and treasury bills. I will come to treasury bills in a second. They are not risk-free. They claim that treasury bills are risk-free because it's backed by the government. Essentially, they say that the government will fund it basically by printing money. They're telling you that, don't worry, we're going to back it. If push comes to shove, we're going to print to save the bondholders. And honestly, that is a really terrible thing, because by printing money, they're going to devalue the purchasing power of existing currency. And the next level down, we've got paper money. So this is what many people are holding in their bank accounts and deposits. Paper money, aka cash. It is. You see, it's not the lowest level there. There is some risk to holding cash. There is some risk. I'll come to that in a few minutes as well. And my favorite asset class at the bottom right there, gold. Gold is at the bottom because it has no counterparty risk. It does not default. It does not bankrupt. It always protects you outside of the banking system. It's the most liquid asset as well. So if you ever need to sell your gold, there will always be a buyer because there is always demand. Now, just to touch slightly on what pensions invest in, because this is part of the unfunded liabilities. Pensions do sit in the red to like teal colored range. So between unfunded government liabilities and listed stocks. Pensions invest in a lot of the risky assets you've seen on the pyramid just now. So they invest in stocks and bonds, real estate, alternative investments, so private equity, hedge funds, commodities, infrastructure, cash, so short-term deposits, and inflation hedging securities. They claim they invest in gold, but you will have to tell them to invest in gold for you. Personally, I think it's just better to buy gold yourself, hold it privately, because sometimes some pension funds might go under, so they'll end up keeping the gold. Just avoid that. Buy your own gold, buy it privately. And another thing I think you guys need to understand is the interest you earn on bonds, on government bonds, is the payment you receive for the risk that you are taking. The reason that gold doesn't give any yield, the reason that gold doesn't pay any interest is because it does not have any risk. Of course, it will fluctuate because the price is being dictated by the futures market. So the futures market is basically the very, very top derivatives. This is paper gold, as it's also called. Essentially, paper gold is just contracts, promises to redeem gold from the COMEX, the exchanges, but they never actually take it. They just flood the market with so much paper. They tell you that gold is risky because look at the price, it keeps fluctuating. But on a long enough time horizon, we're talking at least 3 to 5 years, gold goes up and to the right of the chart over time. So when you hold government bonds, when you hold treasuries, the interest you earn is almost always lower than the inflation rate. So you're guaranteed a loss from the jump. You're guaranteed a loss. Now looking at cash, this is what many of us are holding in our bank accounts. This is why I say you are already investing. You just do not know it yet. Cash is an asset class, but it is guaranteed to lose its value over time. Now this chart shows $1 worth of purchasing power dating back to 1913, which is when the Federal Reserve was created, to today. So back in 1913, today's dollar could buy you 30 Hershey's chocolate bars in 1913. Progressing, it could get you 10 rolls of toilet paper by 1929, 10 bottles of beer in 1933, 20 bottles of Coca-Cola in 1944, 10 bags of pretzels in 1953. And notice that the dollar amount is decreasing. It is decreasing. So $1 today was equivalent to $26.14 in 1913. In 1964, it could get you one drive-in movie ticket. 1971, 17 oranges. 1971, remember, this was the year that the US finally went off the gold standard. You could no longer exchange your dollars for gold. 1987, today's dollar, could only get you 2 boxes of crayons. In 1997, it could get you 4 grapefruits. By 2008, the great financial crisis, $1 today could only get you 2 lemons. And by 2020, $1 can only get you one McDonald's coffee. So if you're holding cash, where is this trend going? It is going down to 0. Look at the left axis, right there, the left axis. There is a 0 mark there. On the Federal Reserve site, they do have the 0 mark on the purchasing power of the dollar as well. So they are telling you that the purchasing power will go to 0. It will go to 0 if you're holding cash. Please, I implore you to get out of cash. At least if it's your long-term savings, do not save long-term in cash. You can get gold for as little as, I think, £200. If you're earning, you could probably spare £200. If not gold, maybe look at silver. So the £200 will probably be about 1/10 of an ounce. Just start somewhere. It's important to start somewhere. Please get out of cash. And now we'll end with something that I found quite amusing. I saw this tweet right at the end of 2024. It's from the Federal Reserve, the people who promise to steal at least 2% of our purchasing power every year. They say scammers are working hard to spend your hard-earned money during this holiday season. Well, it's not just this holiday season that scammers are looking to spend our money, because governments are always looking to spend our money. I hope you guys found this entertaining. I hope you found it informative as well. If you did, please hit the like button, subscribe as well, and share this out with people who you believe need to know this. Friends, family, it is vitally important that the word gets out that cash is not a good long-term way to save. Please, please get out of cash. Get out of cash. I'll see you in the next video. Peace.